Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining us this afternoon, we have Mike Lefebvre. He's Director of Cybersecurity, SEI Sphere, as well as David Endler, co-founder and general partner of Runtime Ventures. We're here to discuss how financial advisors should be thinking about cyber preparedness and best practices for the long term. Gentlemen, it's great to have the both of you with us. Welcome to Trade Talks. And Mike, let's talk about some of the misconceptions around cybersecurity. How are advisors perceiving cyber risk?
Sure. Well, Jill, thanks first off for having me here. And just a quick start about SEI and our background. We deliver technology and financial investment solutions that connect the financial services industry with capabilities across investment processing, operations, and asset management. We work with thousands of investment advisors, so we know this space pretty well from a broad and depth perspective. So when it comes to advisors understanding the cyber risk, it's really sort of twofold. First, there's what I'll call a superficial understanding that the risk exists, that the threat is real. But then secondarily, there's sort of this notion of, well, we're too small for someone to care about us. An attacker wouldn't care about us. And it's understandable how there can be that misperception from the sense that smaller incidents aren't making the news. You're seeing in the news the multi-million-dollar ransomware payouts. It's not exactly conversational nor newsworthy to say things like, oh, like here is a $100K payout, a $250,000 K payout here and there. But it happens all the time. So there may be a false sense of security strictly because the news is disproportionately covering the larger incidents.
Right. Of course, that's going to get the headlines, but it's interesting here, Dave, when you think about that, because you are a smaller company and you do have really critical data when it comes to personal information on your clients, you have their net worth and so forth, you can't afford to have a cyber breach if you are a smaller advisory or a smaller wealth management office. It almost seems counterintuitive to not put that at the forefront.
Absolutely. And I think it is important to understand that some of the most sophisticated organizations out there that have spent the most money on their security teams and technology have suffered breaches. And so to that point, it is likely that you as an organization will at some point suffer a data breach. Whether or not it's directly your fault or not, there's also a sense that you need to understand that it's not necessarily always under your control. Many organizations are beholden to the security posture of the vendors, the IT vendors that they bring in-house. Point in case, the SolarWinds breach was a great example of a supply chain attack. Another fancy way of saying that your IT vendor made you inadvertently expose data without anything that you actually did. So I think in all of the planning and all of the thinking, it's important to understand that it's not if, but when. If the most secure organizations in the world are going to suffer breaches, it's likely at some point there will be some exposure.
Right. And that kind of is a scary thought when you think about it. If one of your third-party vendors get exposed, you inherently have that exposure as well. Let's talk about the SEC rules for a moment here, David. What's changing? What should advisors be aware of?
Well, you are now legally required to inform your clients, of any potential data exposure, data breach. So first and foremost, you need to be able to understand what the requirements are, not just from an SEC perspective, but there's other regulations out there as well. From a state perspective, there's European regulations, GDPR. And so first and foremost, you need to understand what was exposed, how was it exposed. Now, oftentimes you may not have the resources to spend on a sophisticated enough security team to answer those questions. And so it's important to, before any of this occurs, to make the right relationships with third-party advisors who can come in, help you prepare, in some cases, help come in and answer those questions for you. And it's not just technical advisors you need. There's all sorts of legal questions which you don't want to answer alone. And so I think the SEC rules for advisors are looking very similar to how many enterprises have to deal with data breach requirements today.
Yeah, especially when you have multiple jurisdictions that you have to deal with. So, Mike, what are the three main concerns that you see from advisors about the SEC's latest cyber rules?
Sure. Well, taking a step back from regulation, though, I worked for 6 years in incident response. And one common thread from all the incidents that I worked was really disbelief, right? There was a lot of just, I can't believe this happened to us until it does. And thinking for small to medium-sized businesses, even large enterprises that think the attacker doesn't care about us. And they're largely right. The attacker doesn't care about you personally, individually. But if you throw enough lines in the water, you're bound to catch some fish. And that's exactly what they do. And until they have a digital hook into your environment, that's then when they start to care. So from a regulatory standpoint, I think it's a little bit of linear thinking in the sense that we're going to wait for regulation to tell us what to do and how to protect our business. We need to get ahead of that, because there's one thing attackers don't care about is regulation. They're coming at you regardless of what regulators are going to do.
Yeah, I mean, that's a great point too. And we have a history of sometimes regulating by enforcement, and you don't want to be caught up with that. And to your point, Mike, there's two sides of the coin here. One is mitigating the risk threat. And then of course you have to have a response if there is an incident. What are best practices for communicating this to a client?
So first and foremost, I'm not a lawyer, so nothing I say here can be construed as legal advice. But first off, I would engage internal or external counsel for sure to understand the scope of what's going on. The term breach has legal definitions in all 50 states, federally, and even internationally. So I would reserve designation of the term breach, if at all possible, to qualified counsel. When it comes into notifying clients, so the challenge here is that this undermines trust. It takes years to build up trust with our clients and one breach to then break that trust. And so if we can talk about getting ahead of a ransomware event instead of having to clean up and do damage control, we're going to be in a much better spot with our clients. So when it comes to doing communication, ultimately, you are going to want to rely on external counsel as to what the proper requirements are. You're going to have different state legislations, attorneys generals to comply with. And it's also important to note that after an incident is then made public, that's just the start. You're then going to have a whole world of future reporting, maybe client sort of civil suits and that sort of thing. It's really not as easy as just I paid the ransom and got back to business. It's now then shifted into a whole new world.
Yeah, and that's why I use the word incident. So thank you for making the distinction between incident and breach. That certainly is important when you think about it from a legal perspective. But David, what about training your team? It's not just one singular response. How do you prepare your team should an incident take place?
So I think first and foremost, you need to train your team on the right policies and procedures. Who should have access to certain types of data? Who should be talking to the press? Who should be communicating internally? And so first and foremost, it's a good idea to bring in some professionals to help write those policies. There are industry standard policies and frameworks that can get you up and running. And then, in terms of training, there's some obvious training that, all organizations should be going through with their employees, such as, phishing simulations. And we've all had to do it probably if you work at a big company, and, some of it is silly, but it's important because oftentimes organizations spend millions of dollars on technology and it's easily circumvented by a human, not necessarily a nefarious insider, but someone just trying to be helpful if they think someone from the IT desk is calling them. Another really important part of any cybersecurity program is to run practice drills, otherwise known as tabletop exercises. So in the event of a breach, it's important to know who has the ball when it comes to that communication. Whose job is it to contact the external legal counsel, external auditors, external incident response team? I think it's important, the larger an organization you are, to already have a relationship with a third party who could come in, who already knows your systems, who's not going to waste time, trying to learn your environment. And that will shorten the amount of time you can get the information out there. And so I think also just building trust internally with your employees to understand that, security is always a team sport. Security teams are often seen as the people with the pointy stick trying to, make people look bad in an organization. But more modern, philosophy is that those teams are enablers. They're actually there to help prevent issues and also make, your business thrive.
Yeah, I mean, you bring up some great points. I remember early in my career when, the trading desk, we had our annual compliance presentations, and they came out and said, we're here to make sure that we're in compliance so you can do, the job for the company and drive revenue. But, it's another great point that you bring up. We had a cyber panel earlier in the week, and one of our guests had said that social engineering, your phishing, vishing, smishing, that is the biggest vulnerability that is open to enterprises of all sizes. So, Mike, when you think about it, how do you implement an incident mitigation and response plan that is sustainable and not specific to just implementing and integrating the technology, but something that is a long-term practice for an enterprise?
So David had a great point about having an incident response plan in place to expect this to happen. It's important, though, to make sure that it's not so prescriptive that you've got run books that are, 30 pages long and specify a specific scenario. Because first off, every business is unique, and then every attack vector has its own unique fingerprint. So you couple those two together, and it's always going to be on the long weekend when the person with the credentials are out of town, and then you have no idea where the backup drive is. So really, an incident response plan is really supposed to be, think about when we were all in grade school and we practiced fire drills regularly. It was prescriptive enough that no matter where you were in the school, you knew where to go and exit, but it didn't specifically say that, you must do this. So different with incident response plans. Have a general framework for what to do in the event of an incident to properly escalate it and then respond to that as specific to your organization. Doesn't matter what other organizations are doing, but make sure it's written to something that's actionable by your organization.
Yeah. David, what about outside audits or independent audits and experts, bringing them in within the org?
Yeah, that's really important. And especially because security is always a snapshot in time. Like today, your organization may be extremely secure and, your staff may be highly trained. Unfortunately, in a couple of weeks, something may change. You may, have offboarded some people and forgot to, remove access, or you may have, brought in a new tool and now it has a vulnerability in it. And so third-party audits are not just important for keeping yourself honest, but it's important to show for third parties that you have the best interest of not just your clients at hand, but that you are following well-known industry standard frameworks. And then there are attestations that you can get from auditors to say, you have met all of these requirements. And some clients may ask to see that proof. In organizations where you're selling IT tools to larger organizations, maybe in fintech or highly regulated industries, they will often ask to see those attestations as well.
Yeah. And Mike, to wrap up here, when you're thinking about supporting the future of cyber protections, financial advisors are financial advisors. They're not cyber experts. We all have a role within the space. So what's the best way for this to be a longer term investment and protect the future of cyber within the advisory space?
Absolutely. I mean, no different than a family would invest in working with a financial advisor to help them understand their wealth and their wealth management. Advisors should look to partnering with someone that can help them understand managing this risk, managing the threat, managing the compliance space. Maybe it's even insurance. So there should be no shame in understanding that we need to find credible partners to help us protect our businesses with the same fiduciary mindset that we do as financial professionals. And that's something I'm speaking as a technologist. Technologists can absolutely learn a lot from what the steadfastness of it means, what it means to be a fiduciary, and bring that into technology. And that's something that I think is ultimately going to help us secure businesses better into the future with code that is much more resilient for protecting our lives and really empowering our livelihoods.
All right. Appreciate both of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.